What's going on, my fellow wealth creators? Matty Ice here. In this video, I want to talk about 5 specific reasons why I believe dividend paying whole life insurance is the absolute best place to save money, store capital, especially if you are a business owner. So I'm going to be talking to my business owner friends primarily in this video, but there are some huge, just major advantages of saving in these policies, guys, versus traditional savings vehicles like savings accounts, CDs, treasury bills, whatever it is that you're doing. There's just so many advantages that we get in these policies. And I want to be clear, I'm not talking about the whole life policies that you hear about in mainstream financial media from Dave Ramsey, Susie Orman, or pick your favorite, whatever, who like to rag on whole life insurance, and they say it's a terrible investment. It takes forever to get access to your money, blah blah blah. I'm not talking about that. I am talking about dividend paying whole life insurance with a mutually owned life insurance company that is specifically designed, custom designed for high cash value. A lot of people are not aware that you can even do that. I wasn't aware of that for a very long time. But when I did, and I saw that you could actually, I learned it, and I saw that you could actually design these policies to be extremely efficient savings vehicles, it became a no-brainer to me. And it's been an absolute game changer in my life, which is why I want to share it with you guys. And it's very, very beneficial for business owners. And here's the thing: if you like high-yield savings accounts and bonds and treasury bills right now, CDs, whatever, because the interest rates are a little bit high, then you are going to love custom designed dividend paying whole life insurance, right? Because it's effectively it's the equivalent of a high yield savings account when it comes to rate of return. All right, we're going to get into that, but I just want to go through some specific benefits that we get over in these policies over these traditional savings vehicles, because it can make a huge difference in our life by just simply changing where we store our capital, where we save our money. All right, because we're not getting a lot of benefits from the banks. We're going to get into that. Let me go ahead and share my screen. Kind of jumping ahead of myself here. All right, but yeah, let's get into this. Let's first talk about, I want to cover, do an overview of the 5 main benefits, and we're going to get into each one in more detail. But the first thing I want to do is ask you a question. This was a question that was proposed to me at the beginning of my journey, and it really shifted my thinking around money and how I'm saving it, right? It made a pretty profound effect on my thinking about money. Here it is. If you're going to save money, why not save it in the most efficient way possible? Or put another way, why not save it in the most efficient vehicle possible? All right, so ask yourself this: what benefits are you getting from saving money in a traditional savings vehicle, storing money at the bank? Well, right now interest rates are a little bit higher, right? So that can be attractive. There's instant access. Usually we have debit cards, ATM cards, you can write checks on it. That's about it. We don't really get any other benefits by having money in the bank. And historically speaking, interest rates aren't very good on these different savings vehicles, right? In fact, when we store money in the bank, it actually works against us. Our wealth is compounding backwards because of inflation. Traditional savings vehicles do not keep up with inflation at all, right? So it's actually detrimental to us to keep and store money in the bank, right? So you ask yourself that question, all right? The next question asked though is, okay, so I see that I'm not getting a lot of benefits here. Where would I store my money then? Is there an alternative? Is there a more efficient way to save money? The answer is yes. And when you do your research and you understand how these policies actually work, you realize that these are very, very efficient savings vehicles, great places to store capital for emergency funds, opportunity funds. I have tons of videos on my channel, guys, about how I use my policies to build wealth, consolidate debt, purchase vehicles, do private money lending, all this stuff that I use my policies for in my business and just my personal life. It's really, really powerful. I'll link those down below so you can see some specific examples. But you quickly realize, as you start to understand how these policies work, that there's so many more advantages that we get over traditional savings vehicles. These are the primary 5 that I want to cover in this particular video. Uninterrupted tax-free compound growth. This is really powerful. Typically, these policies, when set up for high cash value, all right, they'll net pretty close to what a high yield savings account would do, 3.5%, 5% tax-free. All right, so that 3.5% to 5% doesn't even account for the tax advantages, which is the next benefit that we get as well. All right, because those traditional savings vehicles, they're taxed every single year, right? So there's massive, massive tax advantages that we get in addition to the uninterrupted compound growth. So we're building wealth here. All right, we're putting our money to work. in a safe place. We're not comparing this to the stock market or any other risky investment. This is our safe money where we store capital. All right, that's what we're talking about. Here's another benefit. There's a built-in death benefit, guys. Does your savings account come with a massive income tax-free death benefit that would go to your loved ones if you passed away tomorrow? Probably not. There's great creditor protection, which is really important for business owners because we live in a society where you can get sued for just about anything. And actually, let me change this up here really quick. That's probably a little better. All right. So you can see the whole slide. I'm not blocking it. All right. So creditor protection, really important, really powerful. Here's the first one, actually, though, that I really want to dive into: access to capital. Why, like this right here is why I think this is so beneficial to specifically business owners, because business owners need capital, right, for all sorts of different things. Well, what if you could start to become your own source of financing as opposed to relying on traditional banks or just traditional financial institutions, third-party lenders? Like if we could slowly start to become less dependent on them, how much more control would that give you in your business? Like, and also, what would it do to your bottom line? We're going to get into that as well. All right, but there's so many benefits of setting up these policies to become your own source of financing in your business. Now, let me break that down first, and then we'll get into these benefits. How does that actually work? All right, let me go full screen here for a second. All right, so for those of you that are new to this concept of using whole life insurance as a savings vehicle, right? When you design them for high cash value is the equivalent of equity in your home. Okay, so when you have equity in your home, you can access up to a certain percentage of that equity to use for another investment opportunity, cover an emergency, whatever it is that you want to do. All right, cash value is literally the same exact thing in a life insurance contract. It's the equity we have in our life insurance policy that we could borrow against at any time, and it's actually even way easier than borrowing against the equity in your home. Okay, so that's what allows us to start to become our own source of financing, is if we're able to shift our savings, not, probably not all of it. I still have some money in the bank, but we shift our safe money where we're storing that capital. We shift it into a policy. It's literally all we're doing is changing where we store capital. And I can get access to up to usually 90% of that within the first 30 days. I took my first policy loan, guys, in 2 weeks after I set my policy up. And I had access to almost 90% of it within 30 days. Okay, that's unheard of if you listen to mainstream financial media when it comes to whole life insurance, right? Usually they tell you it takes years to get access to your money. No, not if you design it for high cash value, right? So we're just shifting where we're storing our capital, and we're going to use policy loans. We're going to borrow against our policy to do what we need to do in our business, right? So we slowly start to become less dependent on third-party financial institutions, right? And there's a lot of benefits to that. Let's get into the benefits now, all right, of why would we do that? All right, so number one, quick access to cash. All right, so once your policy is approved, it's funded, you have access to the cash value, guys, you can get in almost not instant access, but it's pretty close. The money's in your account in 1 to 2 business days usually after you request money from the life insurance company, once you request a policy loan. So we're talking about quick access to cash. It doesn't take weeks or months or whatever like it does with a lot of traditional financial institutions. We're talking about 1 or 2 days, all right? There's no waiting periods, approval delays. There's no application process. Obviously, there's an application process to get the policy in place. It is life insurance, okay? But when it comes to financing and accessing your cash value, it's so easy. There's no income verification, no credit check. They don't care about debt to income ratios. They don't want collateral. They don't come back 2, 3, 4 times and ask you about this part of your business. They don't want bank statements. None of that. There's 2 questions the life insurance company asks you. How much do you want, and where do you want us to send it? That is it. You can call the life insurance company. I usually just log into my online portal, tell them how much I want. It's in my account 1 to 2 business days, guys. We're talking about quick access to cash, no application process. Like, how many headaches does that save? How many more opportunities are you able to take advantage of in your business by having access to cash that quick? That's another question to ask yourself, right? Competitive interest rates. This is huge right now, particularly because interest rates are pretty high at the moment. And I've spoken to people in the business loan industry that, over the last couple of years, when the Fed raised interest rates, I mean, people's financing costs have skyrocketed. I mean, business owners' financing costs are just can be ridiculous right now. All right. So what if you were able to get a much more competitive interest rate? All right. So for example, if you're paying 12, 13, 15%, whatever it is, and you can knock that down to 7 or 8, what would that do to your bottom line? I mean, that's huge. That's massive, right? And another nice benefit of these policy loans is typically the interest rate is the maximum interest rate they can charge is capped, usually at 8%. Every company's a little bit different, all right? But the companies I'm with, I believe it's the cap is 8%. That's the most they could charge us, which is still lower than what a lot of other third-party institutions are charging right now, right? So what does that do to your bottom line with regards to competitive interest rate? Not to mention this is simple interest that we're talking about. I'm not really going to get into too much detail on that. Done other training on that, but it's really powerful. All right. Also, guys, here's I forgot to put this in here in the presentation, but I want to hit this point home really quick. All right. This is worth full screen. Okay. Every time, so when you take a policy loan, all right, just like if you were to take a loan from a bank, right, you're going to make payments on that, and that's going to lower the balance and whatever. The problem is when you take a loan from the bank, all that principal, all that interest is going to a third-party institution, right? That money is gone. Okay, but if you set up a policy, take the policy loan back, as you make payments on that policy loan, every payment you make, your cash value is immediately restored in whatever amount you pay. So if I pay $1,000 back to my policy loan, and I'm paying that back, I now instantly have access to $1,000 of cash value again. So I'm putting back, I'm keeping money in my own personal economy here, in my own business. I'm not giving money away to a third-party institution anymore. I'm keeping it in my own ecosystem. Think of it like a line of credit where you take money out, you put money back in, that money is immediately restored in a line of credit. It's very, very similar, except your line of credit doesn't give you all the other advantages that we're going to talk about, right? But it operates in a very similar manner. So you're able to recapture all of that wealth, guys. Like there's so much lost opportunity cost by giving away our money to third-party institutions. Like it's just ridiculous. So it recaptures all that wealth. And here's the other thing is when you take the policy loan, because it's a loan, it's the life insurance company's money. We're not taking our own money out of the policy here, guys. So what that means is our cash value is going to continue to grow uninterrupted, tax-free at that 3.5% to 5% while we use the money. So we're building wealth long-term, and we're able to use the money in our business like we normally would need to do, like we would normally go to a third-party institution for, right? It's just, again, these are the types of things that when I learned how like these were the benefits of the policies, like sign me up, dude. This is an absolute no-brainer. All right, so really powerful stuff. Next thing I want to talk about is the flexible terms and how you control the repayments. All right, so you set your own schedule and terms. So this is like this is where like the phrase of like taking back control of the banking functions and the financing in your life tends to come from, is because when you take a policy loan, it's an unstructured loan, okay? Because the life insurance company uses like the cash value and like the death benefit, whatnot. Like if you were to pass away, for example, the death benefit would cover whatever outstanding policy loan that you have. So the life insurance the company is not worried about you paying back the policy loan. Obviously, you want to pay back the policy loan always, okay? Because you can lapse your policy if you do not. All right, so you don't want to be a dummy with your policy. Be responsible. If you were to take a loan from a bank, you would pay that loan back, right? Otherwise, there's severe consequences financially, right? So why would you not pay your own banking system back? All right, just doesn't make any sense. All right, but here's the thing: is you are in control. These things are very, very flexible, which is phenomenal for business owners because cash flow tends to fluctuate from month to month, does it not? Right. So if you get a string of bad months in your business and you have a third-party loan, well, they expect to still get paid. And if you don't, what's that going to do? It's going to hurt your credit. There's probably penalties and late fees, right? God forbid you don't pay back at all. What do you lose in that particular case? Like, did you post collateral? Are they going to seize that collateral? Like, what happens then? With a policy loan, you are in control. So if you have a string of bad months and you can't afford to make payments, right? Your cash flow is struggling. You don't have to make payments, and nobody's going to be harassing you to make a payment. Now, obviously, you want to get back on track, but once your business picks up again, you can resume those payments, maybe catch up on those payments, all right, that you originally set for yourself. But you don't have to worry about, hurting your credit, late fees, penalties, losing collateral, right? You're in control of how the policy loan gets paid back. That's massive, guys, just a massive benefit. All right, so let's move on to the next one here. let's get into like the wealth building aspect of this here, from from a like a return perspective. Like again, I really like to stress this, that we don't really set these policies up to get maximum rate of return, right? We're not comparing this to other investments, right? This is not an investment. This is a savings vehicle. Okay, so what would you expect from a high yield savings account? Would you expect a high yield savings account to get a rate of return similar to that of the stock market? No, that'd be ridiculous, right? Yet people compare whole life insurance to stock market investments all the time. It's really stupid. But this is equivalent to a high yield savings account when it comes to the internal rate of return. Like I said earlier, 3.5% to 5% net tax-free compound growth for the life of the policy. I think that's pretty good for a safe vehicle, a savings vehicle, right? And not to mention too, like, you know, that interest rate might not sound really good, all right, but you'd be amazed at what your money could turn into at just 4% if it's uninterrupted tax-free for 30, 40 years. Like, it's pretty incredible, guys. Like, compound growth is incredible, all right? So we don't need a super high rate of return in order to build wealth. But again, we're looking at this as more of just a more efficient place to store capital. And so if our money can grow at 3.5% to 5% while we do that, why not take advantage of that, right? And we compare that to, you know, traditional savings accounts. And like I said, like right now, the you know, interest rates on these things are pretty attractive. But, you know, historically speaking, traditional savings vehicles suck when it comes to interest rates and rates of return or whatever, right? So we're getting superior growth performance here, superior growth potential. All right. Next, tax advantages, guys. These are massive. So whole life insurance grows tax-free. Technically, it's tax deferred. Like if you actually look at the IRS code or whatnot, but so it grows tax deferred. But we can access everything tax-free via policy loans. You could also turn this into a supplemental retirement income stream later on down the road. So you're actually helping to prepare for your retirement as well, because you can change your dividends to paid in cash, and they'll send that to you in a check every single year, and it's tax-free up to your basis. That's pretty sweet. All right, but typically we're using policy loans, and because it's a loan, it's not considered income. It's not a taxable event. So you get access to it tax-free. It's pretty sweet. All right, tax-free death benefit. This is phenomenal. And actually, we're going to get into that benefit here, I think, on the next slide. But the death benefit is income tax-free. That gets passed on to your beneficiaries. All right, so, you know, with a traditional savings vehicle, your interest is taxed every year. So there's not really any tax advantages. What if it gets locked up in probate, which usually you can avoid that if you just name a beneficiary on your account. So that's not too big of an issue. But also, it's tax is a tax when it's passed on. Usually, when your beneficiary receives that, that's going to be taxed normally. So, you know, no tax advantages with that. Major tax advantages with whole life insurance. All right, this is huge right here, guys. You know, because oftentimes as business owners, you know, we're passionate about what we do, and that's why we do it. But we're also trying to provide a certain lifestyle for our family. We're trying to provide for our families in general, right? Well, what happens if something happens to you tomorrow and you pass away all of a sudden? It happens. You know, that's part of life. Is your family protected? Do you have what you need in place to make sure that your family is provided for? A lot of times people don't have life insurance or are severely underinsured in this part of their finances, right? So here's the question. Does your savings account or wherever you're storing and saving money right now, does it come with a massive death benefit? You know, the money in that account, would it blossom in 20, 30x into a massive income tax-free death benefit to your loved ones if you passed away tomorrow? The answer is probably no. Well, in this efficient savings vehicle, because it's life insurance, we have that. So can you see how we're starting to solve multiple problems with one vehicle here, right? We're taking back control of our financing. We're building wealth long-term. We have massive tax advantages. We're protecting our loved ones, right? So we're solving multiple problems here. All right, so you secure your loved one's future and yours at the same time, because again, that policy is going to continue to grow for the rest of your life. All right, it protects your family in case something happens to you prematurely. Business continuity. These policies are often used in buy-sell agreements. So if you have partners in your business, it's really important to have this as well. Tax-free, like I said, is passed on income tax-free. That's just a huge, huge benefit to your loved ones if you're to pass away. So the death benefit is a major, major advantage over traditional savings vehicles. Superior creditor protection, guys. This is a phenomenal way to start to protect some of your wealth from creditors. So you protect a portion of your wealth from legal claims. All right. Most states have very strict laws that protect life insurance from creditors. So, God forbid you find yourself in a lawsuit. Most of the time, and again, it's not legal advice. Make sure you consult an attorney in your area to confirm this. But most states restrict creditors from accessing whole life insurance policies. All right. So this is phenomenal. Bankruptcy protection. I'm not too familiar with bankruptcy, but I have heard of it providing protection in a bankruptcy proceeding. Again, make sure you check with an attorney for that. But the death benefit is protected as well. So it's your whole life policy is protected while you're alive. Typically, it's also protected when you pass away. So if you have creditors lined up after you pass away, God forbid, then those creditors typically can't access or make claims against the proceeds of a whole life insurance policy. All right. So another major benefit, guys, superior creditor protection here. All right. Thought I had one more. Oh no, it's because I started with the financing. All right. I actually reordered my presentation because I wanted to start with the like taking back control of your financing first, because that's a huge benefit for business owners. But I'll go ahead and start to wrap up here. All right. Next, what's your next step? If this has piqued your interest, you're like, okay, this sounds good, but is it right for me? All right. Let's talk about that. So first off, policy design. Okay, that's probably one of the most important things here. If you are going to take the next step with this, whether you work with myself or in my team or somebody else, doesn't really matter. If you want to have a conversation with myself or my team, I will link some resources down below. Take advantage of that. But the most important thing, though, is that your policy is designed properly, guys. I've seen policies designed horribly. Like business owners thought they were getting what I'm talking about here. The agent did not know what the heck they were doing, and they set it up for max commission to them. When you custom design these policies for high cash value, it significantly reduces the commission of the agent, which is why a lot of agents don't like to do it, unfortunately. But you have to design these things right in order to benefit the way that I've described it, to take advantage of all these benefits. Use the policy as to take back control of the financing in your life, in your business. Like, you got to design the policy right. I'll have some links down below that go into more detail about what that looks like, but just make sure your policy is designed correctly. All right, how do we integrate this into your business, right? You want to make sure that you have an actual strategy for how you're going to utilize these policies in your business, all right? You don't have to have it perfect, okay, but should have an idea of, like, if you have this policy in place and you can start taking policy loans immediately, what third-party loans would that replace? How would you actually use it in your life, in your business, right? And then most importantly, guys, do your research. Please, like I did, guys, I did months and months of education before I pulled the trigger on anything. And actually, I almost purchased the wrong type of policy. I almost purchased an indexed universal life policy, which please, for the love of everything sacred, do not do an IUL. 9 times out of 10, IUL is not a good fit for a lot of people, particularly the way that it's normally sold. But I almost purchased one of those things, and luckily I continued to do my research, and I realized, whoa, I want nothing to do with this. Whole life insurance is actually what I was looking for, and you can only make those decisions, like truly educated decisions, if you've done your research, if you know what you're looking for, if you know what questions to ask, if you know what red flags to look for, right? And you know what you're trying to structure here and how to do it. All right, you don't have to be an expert. I'm not telling you need to be a licensed agent or anything. All right, but just make sure you do your own research and you know what you're getting yourself into. Okay, you understand these things, and obviously make sure you work with the right person, preferably somebody that does this in their own life. Like myself, I have 2 of my own policies. I use them in my life all the time. It's been a game changer, like I said at the beginning. So if you want to have a conversation with me or my team, again, I will link that down below. But either way, I hope this was helpful. I hope this just got you to think about things a little bit differently about where you're storing capital, and just a much better way of doing it, right? So I hope that was helpful. If you guys have questions, drop them down in the comment section below. I will talk to you in the next one. To your success. Matty Ice is out.